Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, February 16th at about 2:30 p.m. Eastern. Well, Wall Street's main indexes are subdued and down a little bit today after a hotter than expected producer prices report this morning pushed back market speculations of imminent interest rate cuts by the U.S. Federal Reserve. A Labor Department report showed producer prices increased more than expected in January amid strong gains in the cost of services, heightening fears that inflation was picking up again after months of cooling. Oh boy. And on that note, let's go on to three charts that could give us some insight into the week to come. As we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, you can't see the numbers on the side here because the way this chart was presented on the screen, if I got it where you could see the price, the candle is correct, but if I got it where you could see the price, then the October low would be cut off. So anyway, please know that when I captured this chart today, the SPY was trading at $501.70. Now, we know that the SPY reached an intraday high back here on February 12th of $503.50, and we know that it reached a new all-time closing high, which is always important, on this past Thursday at $502.01. So that's where we are right now. We're just clinging to the 500 level. So we also know here, if we look left on the chart from the October lows at $409 down here and 21 cents, we know that interest rates started to lower somewhat. We know that short sellers started covering, and we know that it created this fantastic uptrend, and we made this V-shaped move here, and then the SPY started up, made higher lows and higher highs, broke over the 200-day moving average, the black line, the red line, the 20-day moving average, broke up over the this resistance here. And that was at 438 right here from back here in October, broke up over that resistance, gapped up to the 446 level right here, kept on going and using the 20-day moving average as its staircase. And both the QQQ and the SPY have been doing this. I mean, it's a picture-perfect uptrend. It will certainly go down in books as an example of an absolutely beautiful uptrend. Higher lows and higher highs are all we need. It started to falter a little bit in 477 back in January, but it's okay. It kept on going and then kept moving up again using the 20-day moving average. And if you remember last week or possibly the week before, I talked about how moving averages, when uptrends like this start, it's like a moving average is like a staircase, and the price action is like our legs stepping up a staircase. We raise one leg, balance on the other, step up in the air, and then we have to come down to back down to the staircase, but the staircase is higher than it was when we started raising our legs. So we have an uptrend here with the S&P, the 20-day moving average, or whatever moving average it is at the time, acting as a staircase and price acting as, we could call it, our legs. And we know that we can't go straight up forever. We have to bring our foot back down to regain our balance, just as uptrends have to do, especially this really nice one. So now, again, we're up to today when it reached a high, and but it sorry, I lost my place here real quick. But when I captured it today, it was at $501.70. So see how price has been moving up the moving average staircase, and it has to come back down here. It's not going to go straight up. It's okay. We've had an absolutely beautiful run, and maybe it can keep going higher in the next week, and maybe it needs time to catch its breath. Our gain here from these October lows up to the highs where we are now has been nearly 23%. Nothing to complain about there. Now the 14-day RSI is back up to the 70 line again, meaning the SPY is still overbought in the short term. Now the SPY does have support. We don't have overhead resistance here of any kind because price hasn't gone there before, but for all practical purposes, but we do have support at the 20-day moving average, which is coming in at $492.93, call it $493. We have a little more down here at $490. We have a little more at $483. And the 50-day moving average is coming in at $479, so, or $480, call it. Those are all potential price support levels should the SPY need them. And again, we have no price resistance to report because it's never been this high before. Now, as you probably know, in the coming week, all eyes will be on NVIDIA, which will announce earnings on Wednesday, February 21st. That's going to be a big deal because NVIDIA has been talked about constantly for the past few weeks. Please know that I am bullish in the long term, but in the shorter term here, I am tightening my protective stops on short-term trades and taking a little bit of profits here and there. Our next chart today is the daily chart of the Invesco QQQ, symbol QQQ. Of course, this ETF represents the top 100 non-financial companies by market capitalization in the Nasdaq 100, including many of the talked about Magnificent Seven companies, including NVIDIA, of course, Meta, Amazon, Microsoft, and so forth. Now today, as I captured this chart, we can see that the Qs were trading at $432.12, down slightly from its all-time closing high right here on February 9th at $437.05. Now we know that the QQQ came down in October to its 200-day moving average, almost, and then it came down to $342, then rallied back up, never did go below the 200 at that point, rallied up over the 20-day moving average, up over the 50-day moving average, and broke out of October, the October highs broke out over that resistance, gapped up on November 14th to open at 383.71, then continued to consolidate into its 20-day moving average. And remember that when we'll call it when the Qs or anything else is in an uptrend, there are two ways that it continue higher. It can either move up and then move sideways, or it can move up and then move down. As long as the low is a higher low, it can be equal to the last low, but as long as it's a higher low, then we have what we call an uptrend, okay? And this one has been beautiful, just like the SPY. So it slipped again in January down to 395. That's all right. So then it rallied, it dipped a little bit again, then rallied, then dipped back down to its 20-day, then again moved up to that all-time high, closing high I told you about, and then down to $432.12 where we are today, still above the 20-day moving average, but now we're starting to cut it close. And I can see here where this has been almost 27% move from October lows here. So you can see where the rallies, notice from the great big rallies that we had earlier in November, December, and so forth, notice how the last 3 weeks it's been more of a grunt and groan type of climbing, which makes perfect sense, kind of a grunt and groan, oh my gosh, you know, my legs are getting tired kind of rally, which means we could have in the next week or so, yes, we could have a little pullback here. It would be normal, it would be natural, and we just want to be ready for it. Okay, so the RSI here, the 14-day RSI has dropped a little bit, so the price is no longer as overbought as it was. We have nearby price resistance up here, as we talked about, at 437, we're going to call it. We have nearby price support at the 20-day moving average at $428. And we have it at the pivot at 425 and the pivot at 417. And then, of course, the 50-day moving average is at 413.94. We'll call it 414. So those are support levels here. For the Qs and the SPY to remain higher for longer, what's going to happen, we'll have to see. What we want is for both indexes to remain above the 20-day moving average, and especially above the 50-day moving average. And remember that definition of an uptrend: higher lows and higher highs, and the higher lows are the most important. So it makes sense that we could have a little pullback here coming up in the next couple of weeks, and it would be perfectly normal and natural. Please do remember the stock market is closed this coming Monday for President's Day. Okay, our final chart today is going to be a daily chart of the ARK Space Exploration and Innovation ETF, the ARKX. I wanted to pick something that, yes, had technology in it, but didn't have, hopefully, the potential to fall if technology starts falling this week. So I'm looking at, and I kind of like this pattern here, I'm looking at the ARK, the ARK Space Exploration and Innovation ETF. It has 35 holdings, 82%, it's an international ETF, 82% of the holdings are North American. Some of the top holdings are Kratos Defense, Trimble, Area Environment, Iridium, L3 Harris Technologies. So it does have technology in it, but it's not, it has a lot of different parts. You'll have to go on the ARK ETF website and look at them. It's very interesting. This ETF is fairly new. It was initiated in March of 2021 and made a high, an all-time high of $21.33, and you can't see that on this chart. Then it fell to a low in November of 2022 to $11.77, and you can't see that. But looking at today's chart that we're looking at right now, we know that from that low in November at $11.77, price moved up, then came back down, and down here in October, it made a higher low, okay? It made a higher low, and you'll see that if you look at a monthly chart. I like to look at long-term charts. They give me a real feeling for what the stock is doing. So the ARKX, we'll call it, made a higher low than the prior low in October at 1264. That's a good thing. And then in October of this year, it broke out along with everyone else up into an uptrend, moved over the 20-day moving average, hopped over the 50-day moving average, and continued up at a premium the whole time to its 20-day moving average. So that meant, yes, it's going to pull back. Most time price moves up at a steep angle like this for a couple of months. It's going to have a pullback. That's the way it is, and profit taking will happen. So it did move up here to its December 2023 high at $15.67. And if you look left on the chart to the last high, that was back in December 2023, and that was at $15.67. So this is a higher high, and that's a good thing too. Now I'm looking at this trade with the goal, what I want to happen, if it will or not, I don't know. I'm looking at it with a goal of a longer term trade. Of course, I'm going to obey my own rules, but I would like to keep it for a little while if possible. In the coming week, if the ARKX stays above the 200-day moving average, which is coming in right now at $14.31, because it may bounce up and down next week. I bet we're going to have kind of kind of an exciting week. So as long as it stays above its 200-day moving average at $14.31, I will add a small position to my trading portfolio, and I'm going to put my stop down here at $13.75. So if and when the ARKX climbs above, this is $15 here, I want it to climb above $15.25 and remain above that level for 3 days in a row. If it can do that, I will add to my position, and of course by then I will be trailing my stop. So you may want to keep an eye on the ARKX in the coming week. Now, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. If you'd like to learn how to swing trade, trade successfully is also very popular. If you like to learn how to trend trade, one of my favorite ways, you can learn how right here. You can learn how to bottom fish like a pro, which I love to do. For novices, how to read charts is a great program and 3 winning setups, perfect for short-term traders. These programs show you how to elevate your trading skill set and how to increase your gains quickly and easily. Plus, they are timeless. Go ahead and check out all of my online training courses by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. Be careful out there. I'm Toni Turner, and this is The Market Now.